Hi everyone, it's Professor Reiko here. Today we are starting a new chapter. This is the chapter on cash and receivables. This first lesson is just an introduction to kind of some of our key terms. Most of this you should be familiar with from your financial accounting course, your 200 level course. But we'll do a brief intro here and then we'll start getting into other topics in the other videos. All right, so as far as cash is concerned, you probably won't have much more than a multiple choice question or two on cash. You might have a teacher that does bank reconciliations to reconcile the cash account, but I probably not. So, I'm going to go through this pretty quick. I typically will just ask a multiple choice question or two and then focus the rest of the questions from this chapter on the receivables and different other some of the other items as far as like discounts and sales, returns, and allowances. These items that we'll get into in a little bit. All right, so cash is the most liquid asset. And cash is actually, cash and cash. If you look here, it says it's usually called cash and cash equivalents on the financial statements on the balance sheet because it includes funds on deposit at a bank, obviously, but also which includes money market accounts with check writing ability. All right, cash equivalents are then also short-term, highly liquid investments that are convertible to known amounts of cash and are near their maturity date, which means there can be cash fairly quick for. So those are the cash equivalents. You see some examples here, include treasury bills, commercial paper, and money market accounts. So that's that cash and cash equivalents. You might have a separate item listed called restricted cash. All right, this just means it's restricted for some other purpose. Okay, and notice here, when you get into your audit courses, you'll talk about materiality. If not material, which usually it's probably not unless it's set aside for something rather large, these amounts would just be included in the cash number. But if they are material, they're segregated from the cash, and whether it's current or non-current depends on when the money will actually be used, right? So usually it's probably not a material amount for larger companies. So you probably won't see that listed out, but that's just another term. So, as far as cash goes, just be thinking multiple choice question. Make sure you understand the concept of cash and cash equivalents, and just kind of pay attention to what your professor covers in class when you go through this. All right, receivables. So most everybody should be familiar with, the two most common types. We have accounts receivable and notes receivable. All right. So when a company provides a good or service to an entity on account, a receivable arises. Okay. They represent a claim against businesses and individuals. You also see people sometimes define it as a claim to cash. All right. Because if you have an accounts receivable, you should be later, receiving cash. So the accounts receivable comes from this journal entry right here. All right. So we'll have either sales or service for a service company revenue. Okay. So you've done this journal entry 1,000 times over your accounting classes. You sell something on account, you debit accounts receivable, and you credit sales or service revenue depending on what line of business you're in. All right. Notes receivable are a little different in that they're a written promise to pay a definite sum at a future date. Okay. So this date we'll refer to as the maturity date. If it's due in 1 year or less, it's a current asset. If it's outstanding longer than a year, it is a long-term receivable. All right, so we will get into how to account for notes receivable, whether there's an interest rate or there's not an interest rate implied on it or explicitly stated on it. We'll go through all of that. Other topics that are coming up that we'll get into is how to account for like sales discounts, sales returns, and allowances. And then with accounts receivable, the big item is kind of our allowance for doubtful accounts, which is where we're measuring or estimating, I should say, how much money we expect not to collect out of this total accounts receivable balance right here, assuming some people will not pay. So these are all things that we need to account for. So this is just an introduction to some of the terms. Wanted to cover cash real quick. Briefly define receivables, which most of you should have a pretty good feel for anyway. And so the next videos we'll start getting into a little bit more detail on some of the topics. All right, so make sure you tune into the next video because we'll kind of really get rolling with this chapter. But just wanted to have a brief intro here. So I'll see you next time. Thanks.